What if I told you you could make $100,000 a year in retirement and pay no federal income taxes? Sounds impossible, right? Well, today I'm going to show you exactly how it works, and we're going to do it all in less than 10 minutes right here on the Howdy Neighbor Retirement Show.
It's the Howdy Neighbor Retirement Show.
Howdy neighbor, Michael Andrews here with Andrews Insurance and Advisory, and today we are doing another Michael-atorial. So here's what the big idea is that I want you to take away from it today. Planning is what makes the difference in retirement, not luck, not timing, and not just how much you saved. So in this episode, I'm going to walk you through a simple example, a couple with $1 million saved and Social Security coming in, and I'll show you how with the right planning and withdrawal strategy, they can live on $100,000 a year in retirement and pay no federal income tax. All right, so let's meet our example couple. We're going to call them Bert and Lonnie. They're both 67 years old. They just hit full retirement age, and they've done a solid job of saving. Between the two of them, they've got $1 million set aside for retirement. On top of that, Bert's getting $3,000 a month in Social Security, and Lonnie is getting $1,500. So that's a combined $54,000 a year in guaranteed income before they even touch their savings. So let's round this out. To hit an even $100,000 a year, Bert and Lonnie take $46,000 from their IRA on top of the $54,000 from their Social Security. On paper, that looks simple, but here's the catch. Every IRA dollar is fully taxable, and it pushes their Social Security into the taxable column. Show that much income, and suddenly up to 85% of their Social Security gets taxed. Here's what that really means with this default strategy. Uncle Sam takes a bigger bite than they expected. By pulling that $46,000 from the IRA, they've pushed their income high enough that most of their Social Security gets dragged into the taxable column. On paper, they end up showing about $76,000 of income. With all of that new deduction from the one big beautiful bill, they will still owe around $3,100 in federal income taxes. So instead of keeping their full $100,000, Bert and Lonnie end up sending thousands of dollars back to the IRS, and that is just federal. State taxes could make even a bigger bite out of all of this. I call this the tax chain reaction. You think you're doing the safe thing, but pulling too much from the wrong account drags more of your Social Security into the taxable column, and that snowballs into a bigger bill than you expected. But here's where smart planning can make all the difference. Bert and Lonnie just didn't wake up one morning with the perfect setup. Over the years, they made intentional choices. Instead of piling everything into one IRA, they've spread their savings across different buckets, and that's what gives them the flexibility to be able to control which accounts to pull from and control over how much the government gets. So instead of having all their money in an IRA, their $1 million nest egg now is spread out like this. They have about $400,000 in a traditional IRA, $300,000 in a Roth IRA, and $300,000 in a brokerage account. Most of the brokerage account is going to be sitting in long-term capital gains. This mix is what gives us the flexibility to pull income in the most tax-efficient way possible. So let's walk through how this works. Bert and Lonnie still want that clean $100,000 a year lifestyle, but instead of hammering their IRA, we're going to spread things out across 3 different accounts. We start with the $54,000 that they are going to be getting from Social Security. Then what we're going to do is we're going to add $16,000 of long-term capital gains from their brokerage account. And instead of yanking the $46,000 from the IRA like we did in the first example, we are going to cap that IRA withdrawal at about $21,600. And then finally, we're going to top it off with about $8,300 from their Roth IRA, which is going to be completely tax-free. So if we add all of that up, Bert and Lonnie are right back at the $100,000 in spendable income. But here's why it works. Thanks to their new 2025 senior deductions, their taxable Social Security plus the IRA withdrawal slide just under that line, which means all of that gets wiped out. Zero ordinary income left on the books. And here's why that's important. We want to take as much as we can from the IRA now because once Bert and Lonnie hit their required minimum distribution age, they won't have a choice. RMDs can shove people straight into that tax chain reaction that we talked about, where your income jumps, your taxes jump, your Social Security gets pulled deeper into the taxable column. Now, the rest of their income is just as efficient. Those long-term capital gains sit in the 0% capital gains bracket, and then obviously the Roth money comes out completely tax-free. So the end result is pretty simple. Bert and Lonnie are living on $100,000 a year, and they are paying the IRS nothing in federal income taxes. $0. Now stack that against the default strategy of pulling everything from the IRA. That path had them writing a $3,100 check every year to Uncle Sam. So with a plan, with accounts set up and withdrawals coordinated, that outcome flips completely. So here's the bottom line. Retirement isn't just about how much you've saved or the return that you're getting out of it. It's about how to use it. Bert and Lonnie had the same $1 million portfolio in both examples, and in one they were handing over thousands of dollars a year in taxes that they didn't need to pay. In the other, by coordinating withdrawals across their IRA, their brokerage account, and their Roth, they kept every penny of their $100,000 lifestyle and paid the IRS nothing. So, do you want a second opinion on your retirement? It doesn't cost anything to let me take a look, but ignoring it could cost you thousands. And if you want to take this relationship to the next level, just give me a call at 918-842-7379 or book a time at andrewsadv.com. You can also like and follow our Facebook and YouTube to keep up with every new episode. Thanks for listening, and we will see you all next week right here on the Howdy Neighbor Retirement Show. Thanks.
It's the Howdy Neighbor Retirement Show, helping you plan so your money will grow. No need to worry, we'll make it clear. Medicare and retirement right here.